Hi guys, Happy New Year 2023. Um, Glad to see you all here. Um, so what we're having is the dollar. What we're looking at is the dollar index currently. So the dollar index usually shows us um, the entire move of the United States dollar across board, right? So if you can look, what we have here is a multi-time frame analysis, as you all know. I'm a fan of multi-time frame analysis. I like to look at the currency pair from the top um, to the from the top to the bottom, that's from the higher time frame, before I move in to the lower time frame for my execution, right? So looking at the dollar index, we have the dollar. The dollar rejected. So what we have here is a head and shoulder from 1st of August 2001, right? So this is the neckline of this head and shoulder from 1st of August 2001. So price formed a demand here, a demand zone, and then after over 20 years later, right, price came back to the neckline and retested the neckline, and the demand turned supply. So this was somewhere between August to October 2022. Late last year, price rejected the neckline and started dropping down. So price dropped down to this dynamic supply demand zone right here. As you can see, you can trace it down from 1999, even as far back as 1998. See, guys, this is the beauty of top-down analysis. You just get to have a bird's eye view of the entire market. So right now we have price action. Dollar is testing this support level over here. Um, Dollar is testing this support level over here at this particular point. So we are expecting dollar to bounce off this support to the back to the upside. But you never can tell. One thing with price is that we stay reactive, we stay reactive. We don't predict price action. We react to what the market gives us, right? So scaling lower into the weekly time frame. If we look at the weekly time frame, what do we have here? So for the weekly time frame, you can see how dollar was rallying. Dollar has been in massive bull run, and I mean this is due to the hiking of interest rate that has been happening. It was post COVID, and then inflation has been running hot, so the Fed had to hike interest rate, and the dollar has been running hot. Dollar has been running steaming hot. You can see the dollar broke the trend line somewhere in November 2022. So if you scale down to the daily time frame to properly see what has been going on, because normally the daily time frame is where we look for the immediate trend direction. And usually, guys, the immediate trend direction is usually where we spot out for market opportunities. Sorry, excuse me. The immediate time frame is where we spot market opportunities to actually execute trades. So if we go to if we can see the high lows, higher highs, higher lows, higher high, higher lows, higher high, higher lows, we have something like a cup handle pattern, higher high, higher lows. So what we had there was a triple top, right? This is a triple top. What we have here is a triple top pattern. And we all know that a triple top, just like a double top, is a reversal chart pattern. I'll take that again, guys. A triple top, just like a double top, is a reversal chart pattern, right? So you can see price made the first rejected this monthly, came down up to this neckline at the 110 region, went back again, rejected this neckline. And guys, don't forget this particular area is also a psychological level, right? This place of rejection, this point of interest, this POI is also a psychological level. So price came again and then rejected it to the upside. And then guess what, guys? Price came firing down, like price came firing down. It tore down the psychological demand and also neckline. Price fired down. You can see how price fired down. Price fired down, and as price fired down, normally when we have situations like this, we know that the existing trend is tired, right? The existing trend is tired. So looking at what price action did here, price go here and then reversed. And the moment price reversed, what were we expecting? Normally, when we have break of a neckline, it's always safe to wait for a pullback to the neckline before entry. So somewhere around here, right, we are waiting for, or should I say, we are anticipating a pullback. We are anticipating a pullback of price action back to this neckline. We were anticipating a pullback to this neckline, but unfortunately, we didn't see that pullback, right? So that showed that the bears were so much in control of this market. The dollar was getting weak. I think this was where Powell gave an hint that they would gradually stop hiking rates early this year, right? So the market pulled back, and I mean, whenever price has been trending for a long period of time, it's always right for price to range for a while, right? Before the continuation of that existing trend or another trend. Guys, remember that um price doesn't usually trend all the time. Price trends probably 30 to 40% of the time, while the remaining times price is ranging. Yes, so we didn't get the pullback, right? But price came, yeah, um, okay, price came and rejected this zone. Price came and this is a dynamic supply and demand zone. Price came, rejected this zone. So you can see, guys, the moment price rejected this zone, I knew that the dollar was still bearish because I was expecting it to still go up to this neckline. But the moment it started rejecting here, it was very obvious that we are still bearish. So what was price doing? Price was giving us series of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, sort of. Yeah. So now price is currently on a monthly demand zone, right? So if you look at this, it seems like we have, so what we have here is like a double bottom. Most times, guys, I like inverting my chart just to see how it looks from the other side, right? It seems like we have um, a double bottom, but like we all know, price has to first break this zone. So if you use our trend line and try to know what's going on, so you can see that in as much as we are anticipating a bull run, until there's a proper break of this trend line, guys, until there's a proper break of this trend line, and then we test, price is still bearish. So we need to wait for price to actually break that trend line. And when price break that trend line, that's when we'll be expecting bulls probably to run back to this neckline. Remember, we haven't tested this neckline yet. So that means overall price action is still bearish. Overall, the higher time frame price action seems still bearish. But for now, we're anticipating a bullish price action. But remember, guys, we stay reactive to the market. We don't try to predict, we don't try to force predictions. We just react to what the market gives us. We just react to what the market is actually telling us. So for now, price hasn't really given us a clear price haven't given us a clear direction. So it seems at the moment price is sort of like ranging at the moment, right? Price is ranging between these two zones currently at the moment. So what this simply means is if price should break if price should break below this supply zone, this demand zone, it means the bears are still in control of this market, right? If price should do something like this, break beneath that zone, probably price will want to come and test this other zone here, this other zone, this other pink zone. Guys, I label my higher time frame zones with pink color. So if you scale back to the monthly time frame, you can see this is um, this is a shoulder for a head and shoulder formation that was formed between February 2015 between February 2015 and March 2020, right? So that's what's up. If price should break beneath that zone. However, or conversely, suppose price breaks above this zone, then we know that our bull bias is at play. So it's still quite early. It's still quite early for the year. We are still expecting um, proper liquidity to come into the market to actually dictate where the market wants us to go. So we need to know the direction of the market. The market is currently ranging at the moment, guys. All right. If the market should break above the zone, we are looking at bullish price action. The market should break beneath the demand zone. We are looking at bearish price action. So um, I don't like predicting the market. I love reacting in the market. But so I'm 40-50% favoring a bull run to the upside, sort of. But I'll wait to see what the market is going to tell me. But this is what I think the market is going to do. But I'd rather wait and see price action few with others. So that's that for the dollar index. You can see the dollar index is currently ranging. We will need these areas to be broken um, before we can know where exactly price is leading us to. Um, yeah. So what we have here is a capsule. Also, price should break above here, right, and test this zone. Remember, guys, this was a demand zone that turned supply, right? So this is also another good place to be looking at bull run. But let's see how price is gonna be. So, anyways, this is just an intro to technical analysis Saturdays, right? We'll have a proper breakdown of Euro USD, the cross dollar pairs, Euro USD, the GBP USD, the pound dollar, and the Canadian dollar JPY. We'll take a look at that as well as the OC dollar too. We'll take a look at those pairs. Remember, those pairs are cross dollar pairs. So if the dollar is bullish, more often than not, those pairs are bearish because the dollar pair is negatively correlated to the cross dollar pairs or exotic dollar pairs, right? So the Euro USD is also known as your anti-dollar pair because it gives you the inverse of what the dollar gives you. So if you just take a good look at the Euro USD, we won't analyze Euro USD today. You can see what the Euro USD is doing. You can see how, sorry guys, my chart is quite dirty, but you can see we are having something like a double top formation on the daily, although it's we are waiting for price to properly tell us what he wants to do because the neckline is yet, let me delete this. The neckline is yet to be broken. Don't know if it's a fake out, but we'll just await proper price action, right? So meanwhile, we are having a double, something that looks like a double top formation on the Euro USD. If you go to the dollar index, you can see that what we are having is something that looks like a double bottom on the daily, right? So you can see how negatively correlated the dollar index is to the Euro USD. You can see that the dollar index is negatively correlated to the Euro USD. That's why they always call the Euro USD the anti-dollar instrument, right? So, anyways, guys, happy New Year. And this is what the year ahead looks like, right? So, okay, for the month, let's see what happens. Let's see what happens. I'm expecting a bullish dollar, but anyways, we'll see how it goes on. Maybe dollar still wants to fall some more, but I believe dollar should be bullish. But let's see how it is. On our next episode, we'll have proper analysis of the Euro USD. We have analysis of the GBP USD and also the OC dollar, right? So I usually trade Euro USD, GBP USD, AUD USD, and the Canadian dollar JPY, right? So the reason why I love trading the dollar pairs is because of the dollar pairs are very, 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 very liquid, right? The big boys usually trade the dollar pairs, and that accounts for the liquidity of the dollar pair, right? And the reason why I trade the Canadian dollar JPY is because as a portfolio manager or as a fund manager, you need to have a diversified instrument, right? So I usually use the Canadian dollar as a diversified instrument away from the dollar instruments I trade because more often than not, the cross dollar pairs usually move in one direction, right? So if the AUD USD is bullish, more often than not, you have your GBP USD and your Euro USD being bullish, and if it's bearish, the same thing. So I usually like trading a pair that's not in line with the dollar, right? Just like the JPY, it's a diversified portfolio. Even if you trade gold, you're still trading the dollar because gold is pegged to the dollar, right? You trade silver and all those assets that trade to the dollar, right? You can diversify your portfolio by trading a pair that is not related to the dollar, sort of. But in the financial market, all pairs sort of is related to the dollar, but this is just for diversification of portfolio because the American economy has different similarities, quite different similarities from the quite different characteristics from the Canadian economy as well as other economies that are not directly linked to the dollar. So, anyways, guys, this is technicals analysis Saturdays, but I had to host to this podcast today being Wednesday. This video today being Wednesday, just to prep you guys up for um um the technical analysis Saturdays that's going to be holding 7th of January, which is in several coming days. So, guys, let's see how it goes. Today we have FOMC minutes to dictate the direction of the dollar. So we have JP talking and Jerome Powell saying his thing and all of that. And then we'll be able to gauge the fundings from it if they are going to hike, if there's going to be hint of hiking or rate as against 1st of February, which is the next Federal Bank Reserve meeting, or if they are going to appear dovish. Remember, dovish signifies bearish outlook, while bullish outlook, hawkish outlook signifies bullish outlook. So, guys, the market is still yet to wear and buckle his sandals for the week, for the month, for the year. So let's see how it goes. Have a lovely time. Thank you for watching technical analysis Saturday, but today is Wednesday. Next talk is coming on 7th being Saturday. Thank you.